The Fed has set Operation Twist into motion nonetheless, but what does that mean for investment strategy for fixed income? Joining me from Columbus, Ohio is Doug Swanson, the portfolio manager of JPMorgan Investment Advisors Core Bond Fund, up 5.6% year to date, and also John and Dominic here as well. And Doug, would you agree with Nicholas that that perhaps some in the markets were expecting something even bigger than what we got yesterday?
Well, when you look at how the bond market reacted, I think the bond market thought it was actually more than what had been discounted. The long bond rallied, and the Fed also mentioned they were going to be buying mortgages, which wasn't necessarily expected. So the mortgage market actually rallied. So I think the bond market thought they did more than what was anticipated.
And what about for you?
It was certainly a little more than what we might have thought. We certainly, we thought that this was a possibility, though.
Doug, it's Dominic here. One of the things that we polled a lot of economists, over 60% of them said that Operation Twist is not going to work. It's not going to do anything to create jobs or spur the real estate market. So what exactly was the whole point of this, if anything, just to lower interest rates and make the stock market feel like it wants to sell off?
Right. I do agree that I don't anticipate it's going to have a big impact on the economy. I do think their mortgage purchases will bring mortgage rates lower than where they had been. Mortgages had been lagging Treasuries, so I think at the margin that will help the mortgage market. There's still a lot of foreclosed homes that are going to have to be sold, so I think it's something that will help. But it's not going to be a home run either.
Doug, it's John Ehrlichman. John Riding, the economist, told us last hour this is a very difficult time for someone on a fixed income just because of what you're getting paid. And I'm curious to know, in the portfolio that you have, are you concerned about the kinds of returns you can get going forward right now?
Well, obviously, yields on Treasuries have come down a fair amount. Yields on other sectors of the market, corporate bonds, have not come down quite as much. We're looking to add well-structured agency mortgages, higher quality corporate credit on the industrial utility side, AAA auto asset backs, that have lagged a little. Obviously, even those yields are lower than where they had been, but we still think there are opportunities.
Well, we had Rick Reeder on, as we were just talking about, from BlackRock yesterday, and he says that right now he's starting to see some value in financials. Is that something you see too, Doug?
Well, I mean, we definitely have a core position in the larger U.S. banks, and they've definitely underperformed. We still, we're happy still owning them. They do have a lot of spread. I think there's going to be more volatility, though, especially with what's going on in Europe. But we think they're a good core holding in a portfolio.
Well, Doug, let's go beyond the core holding and let's talk about investors who want a little bit more yield, more kick. If they go beyond mortgage bonds, people are saying that leveraged loans and junk bonds may be one of those options that investors can look for that extra kick. How much does that play into your investment strategy? Are you buying junk bonds right now?
No, that's an area that I'm not involved in. Obviously that's a sector that's underperformed, and it might continue to have volatility.
Okay, then Doug, just tell us quickly, how are you going to now position yourself after them? I mean, you just mentioned some of the things that you're looking into buying, but how are you going to position yourself after now having the Fed gone through Operation Twist?
Right. I think Treasuries in the short run might still be the best performer, but I think we'll continue to look for opportunities in some of the higher quality non-Treasury sectors that might lag in the short term, but we think over the next year or two will outperform Treasuries.
Okay. All right, Doug, thank you very much. Doug Swanson joining us.